Welcome to our channel. I'm online with a fresh review of the American session. Tomorrow, traders are anticipating the ECB policy decisions, US inflation data, and the talks between Russian and Ukrainian foreign ministers in Ankara. All three events could make a notable impact on trading instruments and spark on volatility. The first thing to discuss is the US stock market. Three major US stock indexes tried to rebound yesterday. However, all of them gave up at the end of the trading day under the pressure of elevated oil prices. Crude oil printed multi-year highs after the US had banned oil imports from Russia. The market response looks exaggerated. It made no impact on the European market. Besides, the US has sufficient inventories of its own oil. Russian oil imports account for just 3%. Joe Biden took this decision in support of Ukraine. Nevertheless, the stock market fell in response. It closed with minor losses on Tuesday. The Dow Jones shed 0.6%, the Nasdaq edged down 0.3%, and the S&P lost 0.7%. It made a modest decline compared to a plunge on Monday. However, this dynamic signals mounting uncertainty and anxiety on Wall Street that is worsened by expectations of crucial economic data. In this context, the S&P 500 is likely to extend its fall in the medium term. It's expected to trade in the corridor between 4,130 and 4,210. Meanwhile, the US dollar remains the convincing winner among safe haven assets. Its index has grown 0.6% since Monday to 99.2, the highest level in the last 14 months. Yesterday, it was trading at around 99 points, and today it came under pressure and retreated to 98.85. Analysts expect it to trade in the corridor between 98.60 and 99.20. Global investors are sitting on the sidelines of the Fed's policy meeting that is widely expected to end with a rate hike of 25 basis points. Experts do not project the US central bank to come up with more rate hikes, despite soaring inflation. Such a forecast is based on the Powell's message about a cautious approach. Amid persistent political and economic risks, the US dollar index could conquer new highs of May 2020, heading for the level of 100 points. The USD CAD paced trading higher. Yesterday, the loonie, fed by a rally of oil prices, gave it to the US dollar that advanced due to global uncertainty. Today, market sentiment changes, and the currency pair dropped from a 3-month high of 1.29. Nevertheless, it was a minor correction, and the pair resumed the overall upward move. The fundamental picture remains the same. Confusion among investors outlines rally in the oil market. The EU has not joined the package of energy sanctions slapped by Washington. So, crude oil will hardly make another spike because the commodity asset is strongly overbought. Any diplomatic efforts to settle the crisis will cool down oil prices. Meanwhile, our analysts expect the USD CAD pair to trade in the corridor between 1.28 and 1.29. Bitcoin surprised investors with its impressive growth. The flagship crypto has gained 9.27%. At the moment of recording this video, the digital token rose to $42,000, and yesterday we mentioned that some buyers entered the crypto market. Unlike high-tech stocks, Bitcoin managed to stay in the upward channel. The price is likely to test resistance at 43,545. A more distant outlook is an open question due to high volatility of this trading instrument. Analysts warn about market turbulence tomorrow, hence Bitcoin might drop to $37,500. Global markets are still overwhelmed by a panic mood and frustration amid the geopolitical jitters. Investors find it hard to adjust portfolios to constant changes. Make sure you develop a prudent trading strategy. See you tomorrow.